Hey everybody, this is Jim at sb500chart.com. It is Sunday afternoon, a little bit before 3 o'clock on October 11th, 2020. We're going to take a look at the S&P 500 chart for the week closing October 9th. Before we do, I need to remind you the website and the video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Looking here at a 30-minute chart. Well, I got this to say, looking back a little bit more than 2 weeks, certainly when we broke out over this line that is the descending resistance line and that descending wedge, sure looks like that was a strong call that we would be returning to roughly where that wedge started to form. Now, of course, we're not there yet, but my point being, we got over that line and it has been up ever since. Additionally, a couple weeks ago, we identified this as a likely, not solid now, I mean, this could still be revised, but this sort of looks like a neckline of an inverted head and shoulders pattern with a little tiny right shoulder. We saw a lot of these 5-6 years ago, so maybe this is another one. The other possibility is this is not the neckline, and instead it ends up being an upsloping neckline. That is also a possibility. There's no way at this point to really know for sure. I'm going to clean up a few things here because there's no need to have this thing so cluttered up. We don't need that anymore. We don't need that. Okay. So, the week was strong. We closed near the highs of the week. However, we also closed at this upper line of ascending resistance. So I'm not really thinking we pop over that tomorrow. Matter of fact, what I would rather see, I'd rather see 3 days of some sideways to down action. I think that would probably be the healthiest thing we could encounter in the week ahead. In other words, we come back down to a line of support, be it this one or something else that we haven't really identified yet. And if this is the real neckline, well, then maybe we come down to it, then rebound higher. But there you can see this past week we sort of revised this idea of a channel, and right on cue here we come up and on Friday tag that upper line of resistance. Now if we back out on this one more time, and if this is an inverted head and shoulders pattern and this is the correct neckline, maybe it is, maybe it isn't. Well, we measure the depth of the pattern. We started the breakout rather on Thursday, really solidified the move over this line on Friday. Folks, that gives us a target of, let me get that on there, 36.60. That would be a new all-time high. And what can you say? This market just keeps on keeping on. What do they say? Don't fight the Fed. And also, some of the scares we've been getting lately have really served a good purpose. And that is, it's given the markets some pause. It's given some people who are looking to sell an opportunity to sell without, without there being a systemic bearishness. In other words, when we see a sell-off, it's not, I don't think, it's not because the markets have to do that. It's because people are concerned. That's good. Bear markets happen when, even if there's good news, the market continues relentlessly to go down. That's, I just don't think we're anywhere. That's simply not the case. So, we'll just keep watching it together. But right now, I'm thinking this line, we could come back to this and say, no, that's the neckline. Okay, but for right now, this is the best I've got. So I'm sticking with it at the moment. And if this is correct, then we get that 36.60 measurement. If we find out that this is not the neckline and we come down and actually form a more complete right shoulder, well, there's good news there, because that would mean we adjust this neckline. And that means the head is deeper, and that means when we break out, we will break out from a trend line that is higher. And if that's the case, then we'll have a target up probably north of 3,700. But for right now, guys, things are just clicking. Things are just clicking right along. And however, watch when we get up to this 35, assuming this 35.65 area, because that is right at the apex of this large rising wedge. And remember, this wedge still sort of was saying we should be getting down to just over 3,000. So, after we hit a high that might be associated with this inverted head and shoulders pattern, I would certainly be very, very aware of that level, because I think we're probably going to see the effects of this large orange rising wedge right here. Now, we'll issue this one caveat. We've seen big rising wedges in the S&P before that did not do what they typically do. So again, I would say watch it. Just if we get up to that level and then we see signs of a top, then I would certainly take that into consideration with whatever you might want to do. Again, reminding you, this is not investment advice. We're just looking at charts to see if there's any sense to drawing these lines on a stock chart, and if there's any validity to the idea that a stock chart tells you something about what's going on in the markets in the way of psychology, and possibly even, if you were so bold, what it might mean for the future. So there is your weekly review for the week ending October 9th, 2020. Thanks for taking time out of your day to watch it, and as always, thanks for your very kind support. Take care.